So you may be wondering, where is the cash flow in my multifamily deals, right? I invested in these deals and where is it, what's happened? We've actually seen interest rates rise. We've seen new considerations for multifamily deals. And I want to go over in this video just how cash flow, in my experience, has been somewhat unpredictable in multifamily deals. I'm going to go into the reason why. It's one primary reason why, but I'm going to show you what you can do about it in your investment portfolio. And we're gonna have a great quote at the end, so let's jump in. All right, so welcome. My name is Bronson Hill. I'm the CEO of Bronson Equity. We have about 200 million in multifamily assets, mostly in the Southeast. We also do things such as ATM machines and car washes. We help investors. We're not giving any specific advice on this, simply providing education. So I want to share this deal. You'll see a picture of this deal that we did a couple years ago. It was cash flowing really nice, right on the schedule, about 6 months into the deal, and it just was cash flowing pretty well. And this deal is in Jacksonville, Florida. We felt like, hey, this is a great deal, and the value increased, 20 to 30% by year one. The rents are, going up. Everything's going great, and then all of a sudden, cash flow really slowed down, and it really slowed down for one primary reason. One is that the cap on the interest rates that we purchased was much more expensive. The interest costs rose a little bit just from, we have a cap on the interest rate. So maybe the interest rate was 4.5% and it capped at 6.5%, or maybe it was 4%, 6%. There was about a 2% interest rate. It caps at a certain point. So because of the higher interest cost, it actually affects the cash flow. And so we've noticed that for some of these deals, that at least I've noticed this, is that cash flow is great for a bit, and then it slows down a bit, or some deals take a little longer. We've had some that take longer than our projected 6 to 12 months on a value add deal. Some take longer. And so I've realized with multifamily, it's great for appreciation. We've actually had 4 exits over the last 4 or 5 years. We've had one that has done about 15% per year, another about 15% per year. These are both 2-year holds. We had one that was around 26% per year for a 2.5-year hold, and one that was about an 80% or higher IRR just within 10 months. So obviously we look like geniuses, right? But in reality, multifamily is a phenomenal investment. It offers, inflation hedge. It has all of these different positives to it. You're going to cash flow with it. You're going to be able to have the tax benefits. You're going to have all these benefits, but sometimes cash flow can be a little bit inconsistent, where it means it can be up one quarter, it can be non-existent or down another quarter. Expenses can be higher, and so it's been less consistent as far as cash flow, which to me is obviously a disadvantage. If you're trying to live off of your cash flow and you can't predict how your cash flow is going to be, it can be very difficult. So, I got to share though why I really still love multifamily deals. I love it for, like I mentioned, the inflation hedge. I love it because you use leverage to buy it. So if you buy a property and, let's say it's a $10 million property, it goes to 12 million, you only put 20% down. It's basically your equity has doubled even with a 20% improvement. Now, of course, those figures have changed a little bit because you're having to put a little bit more money down, and we're seeing that. So another real benefit of multifamily is that we're short 3 to 8 million apartment units, depending on which study you look at. There's several studies you can see that show that we're short apartment units. And so how are we going to get all these apartment units? In a lot of areas where they're experiencing just massive amounts of population growth, it's going to be years before they can create more. In a lot of places you can't create more housing because of limitations, because of geography or politics or other reasons. They just can't create enough housing. So, and I will say that multifamily still does offer cash flow. So in summary, I love multifamily. I love what multifamily does for me. We have seen some ups and downs in the cash flow of some deals. And a lot of operators now we're seeing are starting to withhold cash just to make sure they have enough cash if interest rates rise higher, or so they can renovate more units. And so it has been somewhat inconsistent. Now, on the other hand, there are other deals that are very consistent with cash flow. We have our ATM machine fund. There's a car wash fund we've been involved with. There's other types of investments that are more consistent monthly or quarterly cash flow. But I do love multifamily for a lot of reasons. And so I think it's just really important to look at. Most investors I talk to, though, they're really, really interested in cash flow. And it makes sense. If you got a $5,000 or $10,000 a month that you're trying to cover between your rent and your living expenses, the sooner you can cover that with cash flow, the sooner you're able to get there. Versus if you have very little or no cash flow for a deal, in a multifamily deal, and it turns out fine, you've done fine, but the challenge is you haven't had cash flow along the way, and it's hard to live off of that big lump sum at the end. How much of that do you spend? Do you reinvest it? How do you do that? So, right, that's what a lot of people I think are concerned about. So I'd love to know from you, in the comments below, has your multifamily cash flow been consistent in the last 12 months? And if so, just put down maybe what area you're in. I'd love to see that in the comments because it really helps our community. I want to share this quote with you, and it says, the study of economy usually shows that the best time for purchase was last year. And that's, of course, Woody Allen. So, a lot of times we want to get into a deal. We wish we'd gotten in sooner. Sometimes it just involves just pulling the trigger and doing it. So if you're interested in learning about how to use inflation to your advantage, there are different ways that we're using inflation to our advantage of buying assets using debt, such as multifamily, or we're buying other assets that cash flow. You can check out this video up here. That's a video we did about how to use inflation to your advantage. And if you haven't joined our investment club, join the 1,200 other investors that have invested, or at least have joined our club. Many who have invested with us in our deals. And again, we can't really let you know about those deals unless you join our club and we have a call with you. So check out the link below, go ahead and sign up there, and we'll look forward to seeing you on the next video. And stick in the comments how important is cash flow to you and if you're seeing that in your multifamily deals. Thanks for taking the time to educate yourself. We'll see you on the next video.